The stock market sold off. S&P was down more than 1%, and then it recovered, went back to fill the gap. The sell-off is not over, just getting started. We had the Dow end up 75 points higher, up 0.16%. S&P was down more than 1%, ended up 8.5 points higher, up 0.13%, recovering, going back and filling the gap. NASDAQ ended down, though, almost 0.25%. NASDAQ Composite Russell was up just over 0.5%. The VIX had surged, and then the VIX ended up down, getting a topping tail. We went back to fill the gap. The AI sell-off continues. Warned you about that at the top. We just had the worst week for the NASDAQ since the April sell-off. We're supposed to get the jobs report today. We didn't get that. Again, you've got a couple of jobs reports now. Again, when we get the jobs reports, you're likely going to see negative numbers. Saw consumer sentiment decline on concerns about the government shutdown, which is what I told you was going to happen. I told you back on October 14th, 2 weeks into the shutdown, this thing was going to be the longest shutdown in history, and it's going to go on longer than everybody thinks. That's now being reflected in the consumer sentiment that we got today, which is also predicting we're about to move into recession. Again, having all these flights canceled now, all these programs are at risk going into the Thanksgiving Day holiday. You're getting all these flights canceled. Of flights, government shutdown is being done to try to create chaos, try to create pain, eventually trying to create a recession, to cause a recession ahead of the midterm elections. That's why it's being done. They're going to be successful in doing that. We are going to have a recession ahead of the midterm elections, and we're starting to see now the market has peaked, and we're now starting to see it sell off. Starting to see chaos and people having pain, benefits ending, and consumer sentiment is showing that they're likely going to be successful in creating a recession ahead of the midterm elections, which is why I think the government is being shut down. Now, if you look at the consumer sentiment here, Michigan consumer sentiment, again, it dropped again, lowest level since 2022 amid government shutdown fears. And if you look at the consumer sentiment, again, dropping. This is what it does right before recessions, right before 2020, the self-imposed shutdown of the economy. We had it right before the recession in 2007. We had it December of 2007, right before 2001, the recession, the gray shaded areas of recession. Back in the 90s, back in the 80s, and so on and so forth, you begin to see it turn down ahead of the recession, as we're seeing right now. It's a warning sign, a recession indicator. It's a warning sign a recession is getting ready to start. Please support the channel. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel. Most YouTube channels have sponsors. I choose not to do that because I don't want to sell you anything. So I just ask that you just partner with me and follow the link below. Do what you can to help out. It's a secured site. You could take a moment to do that. I'd really, really appreciate it. It would really be encouraging to hear from you. Thank you for your consideration for that. If the microphone's not perfect, again, I just had surgery. I've been making videos from bed. I've been in the hospital trying to get the sound as best I can, but again, not at the microphone behind my desk. So I appreciate your patience with me. Look, the topping tail in the weekly time frame, which you're going to see in this video, it was confirmed by the daily charts turning bearish now. As long as the daily charts are now bearish, the confirmed reversal now in the weekly time frame off major resistance, now the bears are in control. Bottoming tail at the 50 period, we may try to rebound a little bit. As long as signals remain bearish, sellers are in control. The NASDAQ daily chart, and again, trending signals turned bearish. Warned you that was going to happen. It did. We could get a rally back up, and here's the NASDAQ again. We can get a rally back up, and signals will still remain bearish, and we'll be watching the gaps, seeing those on the 60-minute charts. We can get a rebound back up, and signals can still remain bearish. Here's the NASDAQ again. And here is the S&P 500. The daily swing trend signals are validating the topping tail and the confirmed reversal we now have in the weekly time frame. The S&P 500, it gapped lower, and then it went back up to fill the gap. 67.22 was the gap from yesterday. We closed slightly higher, up 0.13%, up about 8.5 points. And again, we're likely headed down to the 65.50 area. This is the neckline. This is the October 10th low, where Trump rattled markets with threat of 100% tariff on China. You're likely forming this massive head and shoulders. You're probably, we've dropped below the 200 period here on the 60-minute chart. We've dropped below the 50, and then now we've dropped below the 200. The 50 is eventually going to drop below it. You're going to likely try to find a bottom down in this area or just below it or above it. Form some type of neckline, either horizontal as I have here, or a slanted neckline slightly higher or slightly lower. And well, I didn't draw that very straight, but slightly lower. But I'm going to be looking for some type of neckline to develop here. And then I expect that you're going to see a move back up to get a right shoulder. So once we come down, I think you'll be coming back up to the levels where we're at right now for the left shoulder here. I think you'll come down, and then you'll be coming back up to get your right shoulder if the pattern does in fact form. We do have several gaps here. Gaps don't have to be filled. They could. It's still possible we get a bigger rally higher into the cloud right here, into filling the gap maybe at 67.96. That's certainly possible. Don't want to rule that out if we get a larger push up before going down. You do have these higher gaps up here that have not been filled, and they don't have to get filled. Again, as I've said, back on the day of the top, I believe we've topped with the Fed. I've been talking about this head and shoulders forming ever since that top. Looks to be playing out so far. Now the S&P's come down to the 50 period in the daily time frame with this rebound back up to fill the gap. I always want to watch a gap. Is it a gap and go? Is it a gap and fill? Or is it a gap and trap? We had these gaps higher, gap and goes. We've had some gap and goes to the downside. Right here, we've got a gap and fill, or is it a gap and trap where we start moving in the other direction and getting a larger counter trend to go back and fill maybe some of these other gaps, or to test the cloud in the 50 period moving average, maybe as we get a death cross. We'll be watching for a divergence here on the RSI going into next week at some point to see if one develops down at the 65.50 area, the potential neckline of the pattern. But right now, here we're trying to rebound off of the 50 period in the daily time frame. Maybe you have to get a divergence on the MACD and the RSI here in the 60-minute time frame before we get a bottom for a larger rally. But we'll be watching to see, do we try to go to the 50? Do we try to fill the gap at 67.96? And the bounce right here is off the 50-day in the daily. Let's look at that. If I bring up the daily chart, you can see we drop below the 50-period moving average. That's this green line right here. We're holding below the 20 and the 10-period moving average. But you got a hammer candlestick and you got a bottoming tail. So do we come back and try to fill some of these gaps on that 60-minute chart? You've got this potential head and shoulders pattern. So we'll probably get a bounce and then eventually make our way down here, then probably end up getting a bigger bounce. As we go down, the 10 will make its way down towards the 20 period, and eventually you'll see them cross, get a bearish cross, and then we'll rally back up towards them, and eventually the 10 and 20 will turn down and drop below the 50 period moving average, getting a bearish alignment of the moving average trio, the 10, the 20, and the 50 period moving averages, which I call the moving average trio. Got the MACD rolling over this week. We've got the sell-off. We'll be watching some of these gaps. Let me just move my annotations. I love these charts and the way they look, but you hit save on them and annotations move and trend lines move. It drives me bananas. But you can see the head and shoulders that I'm looking at here. And maybe this gives us a bounce, back to the 20 or back to the 10 even, back up into the momentum cloud here. And then we go lower if we attempt to fill the next gap above at 67.96. Got a gap above that at 68.52. I'll be watching these gaps. If we can make our way up towards the 10 or 20 period moving average, if we can continue the rally. But again, eventually we're headed down here. Signals are bearish, but we're trying to get this bounce off the 50 period moving average here in the daily time frame. And you're getting a bullish hammer candlestick. Again, as I've said, the hanging man candlestick has been confirmed, and we got to follow through. You confirmed it, and then you got to follow through to the confirmation bar. You're below the 10 and 20 period moving average, and again, They're now resistance. So again, I believe we've topped at major resistance. Probably trying to form this head and shoulders pattern in the topping process, which will eventually give you a much bigger decline as we go into December and January. Now, the S&P 500 is bouncing off of the 50 period. It's going to get some kind of bounce, and then it's likely going to come down to this level. The lower Bollinger Band here, you're probably going to end up seeing a drop below it near this horizontal trend line. It's above it right now, but again, you're going to likely drop below the lower band here, and somewhere around this level or just under it or just above it, you're going to likely get some kind of bullish divergence forming, simple or triple divergence or something on the 60-minute chart that will give you a right shoulder. No guarantee the pattern sets up, but it very well could. But again, I'll be watching the lower Bollinger Band here in the daily time frame. Eventually, we'll be headed down towards the next test would be down towards the 200 period. You can see it barely coming up right there, the 200 period moving average. But first, we have to get closes below the 50 period and then remain below it. You're probably going to drop below it and try to get back above it. In the coming days ahead here, you'll probably get a bounce and maybe come down here and then eventually get this right shoulder. And then again, we'll be watching into December, January. Again, do we start getting this dramatic drop if this pattern sets up? And again, no guarantee it sets up, but you got a pretty good chance that it is setting up. We just may, plow right through the support area of 65.50, but I think you got a shot that this pattern is going to set up. Massive divergence on the MACD that is going to likely give a pretty dramatic drop to the S&P 500 back towards the April lows. That 200 is coming in at this horizontal support, the previous peak from February. Again, eventually that's where we're making our way down. Again, last week with the Fed on October 29th that I thought that we had peaked. We slammed into major resistance on Tuesday, and then with the Fed, we slightly overthrew that resistance in the weekly time frame. I think we're headed back down towards these April lows, and I think we'll be there by January. Now here I have it late December. Again, could go on into January more likely. I talked about the Fed panicking by late December or on into January. I believe the blow-off top is done. I think we have a 5-leg push higher that completed it, and I think you're getting your first wave down right now. The S&P is trying to bounce off the 50. It has acted as support all the way up. We've held above the 50, probably bounce here, and then again attempt to take it out. And you've got that neckline for the head and shoulders pattern in this larger, much larger head and shoulders, and this is what I think is going on right here. Again, back when we were dropping here, when I called the day at the bottom on April 7th, major support and a trend line from the 2020 low. I told you that move was corrective, and we were going to get a blow off top, and you're going to get a bigger sell-off. This was 21%. You're going to get a bigger sell-off than that to kick off the bear market, and that's when the Fed is going to panic. What I think is going on right now, I think you've peaked. I think you're starting it. I think you're going to drop 26 to 30%. Maybe we even go lower than this. And you get a sloping down trend line, possible, but I think it's more likely you're going to drop 26 to 30% on the S&P 500. You give back all the gains, you drop 30%, and then I think the Fed will panic by January, and here I've marked it for the Fed panicking in January rather than late December on the other chart. And here I think you get that right shoulder, and you come back up here, and you've got your head and shoulders pattern. I think that's in the first few months there in 2026, and then I think the bottom falls out of the stock market with this pattern. We go back towards the pandemic lows for a test. I see Bitcoin crash 80-90%. I see the NASDAQ crash 70-80%. The last during the bursting of the tech bubble, NASDAQ 100 crashed about 83%. S&P is NASDAQ Junior. It's probably going to crash more than 50%. The last couple of bear markets, 51%, 57%. You'll see at least 60, 65, 70% decline on the S&P 500. I warned you a week and a half ago that we were going to top with the Fed. We did. I called a top on October 29th, Fed Day, and I think that I'm going to be correct about that. You by Friday, we had dropped with the bullish percentage, and this is showing stocks are in uptrends and downtrends on the S&P 500. It was resting right at 50, and I told you this week we were going to see this thing drop into levels below 50, drop below 50, and validate that topping tail on the weekly chart. I told you it would confirm the reversal candle in the weekly time frame. All this happened before back over here. Again, you got the sell-off in February down to the April low. Remained consistently in the negative region below 50 percentage index. That's what we have going on right now. I gave you a bunch of other warning signs. The S&P 500 could try to rally up to fill the gap at 67.96, moving back towards the cloud, moving back towards the 50, getting back above the 200 here on the 60-minute chart. You get a rally back up and then you drop down, back down into this area. You can end up forming a divergence before all is said and done. If we get a bigger rally back up, or even not reach that gap fill and just try to at least go a little bit higher on the 5-minute chart, if we can get back above the 200 period, we're just under it. Then again, the 67.96 gap and then these other gaps are in play. I don't know that we reach filling those gaps. My signals, which are correct, remain bearish. And again, any rally back up, as long as the signals remain bearish, is a counter trend. Could go just a little higher and then resume and sell off and continue to have the 200 act as resistance that we just keep overthrowing it. We may try to get something bigger with that bottoming tail off the 50-period moving average in the daily time frame. And if we do, I'll be watching the gap fill at 67.96. That's near the cloud here, and the 50-period moving average in our 60-minute time frame. So again, eventually watch for a divergence to develop, a rally, and then eventually lower levels. We'll see if this head and shoulders pattern begins to set up. And do we eventually take out this 50, start moving back to the 200 period, start moving back to form maybe this massive head and shoulders pattern? I think it's going to set up. I think another huge warning sign we've had is the Russell. The Russell made a lower high when the S&P made a higher high, turning off of this trend line and this trend line over here. I talked about it peaking back when the day it peaked. I told you I thought it peaked with that doji. It broke down ahead of the S&P and back tested, but again, the Russell diverging with the S&P, not being able to move to a new high, just as the Dow and the transports are diverging. We're seeing these divergences in the weekly time frame. This is the log scaling. We had a divergence here on the RSI. Here I've got a channel from the 2022 low. These highs pointing up to the next high here, and this massive divergence on the histogram. MACD likely ready to roll over, forming its own divergence here with the most recent price action on the S&P. Personally, I like the price oscillator a little better than the MACD, and again, it's got the divergence here as well. When they go negative, when the histograms go negative, you'll get the MACDs rolling over here in the weekly time frame. You've got the stochastic here in the weekly time frame about to roll over, getting really a bearish touch there. And again, if it drops below 80, you're going to start seeing this big move down, either towards rising trend lines or the April low. The reason why I called a top 1.5 weeks ago, October 29th, 2025, the day of the Fed, is because I told you I was looking for a top with the Fed. What happened with 2007? Have Powell come out, say, well, there's no certainty that we cut rates in December. They're going to cut in December. January, they're going to be panicking. Saying, well, we've done these 2 cuts, and that's gonna prevent the labor market from getting worse. Poppycock. The Fed said that back in 2007. Actually panicked by 2008, January, and that's why I think you're going to see something very similar. You have the rate cuts starting at the same time in September. January, they were panicking. They were saying the same thing. Oh, yeah, we're not going into recession. So I think you're moving down. This is the S&P weekly chart. I think you're moving down to this rising trend line right here, or down to the April low and break the trend line. But one of those, again, probably 26 to 30% drop. I think you're going to come down, and then I think you've got this head and shoulders pattern that could end up setting up. The reason why I called it top is because we slammed right into this trend line. Now, again, This is from the 2020 low to the 2022 low, 2023, 2025. Parallel boundary with the 2022 top. And we hit that upper channel line. Also back tested the 2023 trend line on the 2023 low. I bring it up close. You can see, again, we went up. We slammed right into it. We got a topping tail. Parallel boundary excluding the shadow here from the April 2025 low. We hit it, slightly overthrew it on the Fed day, and we reversed and we got a gap and trap. We broke this trend line from the April low. Shown you that in the daily time frame. If we attempt a little bit of a bounce here, but again, I think you're likely going to this level of support, and eventually, whether we set up a head and shoulders or not, who knows? We'll see. Sometimes they set up, sometimes they don't. Pattern is in play, but regardless, I think you're headed to this trend line right here or to horizontal support down here, and that's going to be about a 26 to 30% drop, and I think you'll be there by January. S&P weekly chart here. I warned you going into the Fed meeting to be looking for some kind of reversal bar with the Fed in the daily time frame, in the weekly time frame. We got it, and we got this topping tail in the form of a gravestone doji, with the cross being in the lower end of the candle. I told you that I thought we would rally back up into the pattern this week of last week's close, which we did, and I told you I thought we'd set up a lower high and eventually confirm this pattern this week, and that's exactly what happened. Now, I told you if I was wrong about this being the top, can get back-to-back candlestick reversal bars. I told you, again, I didn't think that was going to happen. I told you if I was wrong about that being a top and not getting confirmation by the end of the week, or had we moved higher and got a candlestick reversal that moved slightly above this level into resistance again, which, again, I told you I didn't think would happen. But I always tell you what could happen if I am wrong, but I do have the guts to tell you my opinion. Very few people will tell you that. I predicted a top here. Absolutely zero people out there calling for a top. When I posted that on social media, I was completely attacked. But yet, again, I think it is playing out. And I do think that the bull market has ended. We've started the bear market. Now we have confirmation of that topping tail into the channel that I just showed you into the weekly time frame. Bouncing off the 50-day moving average and the 10-week moving average right here, the 10-week moving average. Eventually, we're going to need to take out that 10-week moving average for a bigger drop on the S&P 500. And again, the signals are warning that that is about to happen. So we have confirmation. Now we need to follow through. Now eventually we need to follow through a close below this low right here, and that will take us confirming the confirmation bar. That would be the follow-through move, and that would take us below the 10-week moving average. Seeing this divergence play out on the RSI, divergence on the MACD histogram, and the price oscillator is about to roll over, and you're going to get those MACD rollovers, the weekly charts with the price oscillator as well. I think for the NASDAQ came up to the upper channel line here, slightly overthrew it. You have this broadening formation. Again, I think you're headed back to the April low, and a perfectly parallel channel from these lower boundaries here in 2018 and at the 2020 low. I've drawn a parallel channel from the 2021 high, and you slammed right up into it and slightly overthrew this level. You couldn't close above it, and it gave us a topping tail, and I told you I was looking for that. And then we got confirmation this week and turning off of this level. So a very nice reversal as we continue to get the AI sell-off. Warned you was coming. The same broadening formation on NVIDIA. I covered that here in the week. Showed you the NVIDIA charts. With the reversal off of this upper boundary of the channel for the NASDAQ 100, we also get confirmation to our topping tail in the weekly time frame. Again, we got the shooting star candlestick, the topping tail. This week we needed a close. I also predicted that we go up and get a lower high. We weren't able to make a new high. I was correct about the peak, correct about the lower high, and correct about the confirmation here as well. And bouncing off our 10-week moving average, coming back and filling the gap. I talked about filling these gaps in the weekly time frame. Watching, do we eventually get a follow through? We got the confirmation bar. Now we need to close below this week's low in the coming weeks ahead here, and eventually to take out the 10-week moving average, the red line, for a bigger drop on the NASDAQ. NASDAQ also broke its trend line, and again, we may just go up and back test the broken trend lines, and that may be the end of it. But eventually, I think you're making your way back to these April lows. But the breakdown of these rising wedges and the lower boundary of the trend line there of the wedge and the MACD rolling over these really massive divergences on the MACDs. Just like the S&P, we got a test of the 50, and you got a bottoming tail and a hammer there. Probably going to get some kind of attempted recovery back towards the 20, maybe the 10 as they begin to move to get a bearish cross. Longest signals in the daily time frame remain lower. Bearish, I should say, is confirming those topping tails we saw in the weekly time frame. Beautiful head and shoulders here in the daily time frame as well. We have a hammer candlestick. We'll see if we go back. We didn't fill the gap. We didn't fill the gap from today on Friday. We didn't fill that gap yet. We still can fill that. And then we have other gaps higher up. We'll be watching. Do we go back to the momentum cloud here, to the 10, to the 20? Here in the daily time frame, we've had this massive broadening formation. We got an overthrow move, and we hit that upper channel line, couldn't close above it, got the topping tail in the weekly time frame, and the divergence has now played out and begun to give us a sell-off. Eventually, to get a bigger sell-off, we got to take out these 50 periods. Right now, we're trying to bounce off of them. But a bigger sell-off is coming. Like I said, by January, you're going to be likely down here near the April lows. That's when I think the Fed panics. I think you're going to see 34, 38%, something like that, depending on if we reach this level. We had the bursting of the tech bubble. NASDAQ dropped about 43%, or I'm sorry, right around 40%. If we see that again, you could take out that low right there. So again, and it did it in about 10 and a half weeks or so. Covered that previously, and like the 2007 top, you dropped 20% over 14 weeks. 1929 over about a 10-week period, you lost over 40%. This was a blow-off top. I believe it's done, and now we're going to get a dramatic drop. You got the blow-off top followed by the dramatic drop. Kick off the bear market as the stock market begins to price in the recession. NASDAQ again has a potential head and shoulders here down to the neckline from the October 10th low. Again, if we attempt to fill today's gap or go back towards the cloud or the 50 here, towards the 10 and 20 period moving average in the daily time frame, again, you can see the RSI turn back up, but still end up forming a divergence before all is said and done down here somewhere just above this level, just below it, or right at it, and form that head and shoulders pattern. Bunch of gaps on the way down, bunch of gaps on the way up. And again, I told you this was going to happen, that we were gapping higher, and it was likely going to be this head formation that I've been talking about. Before it's all said and done, you're likely going to form a divergence to form the bottom or a bigger bounce. But again, we could try to bounce with the hammers in the daily time frame off the 50-period moving averages, but those candles are likely to fail. You might get a bounce for a day or two, but again, you're coming down to these lows from October 10th. So we'll see. Do we get a little bit more of a bounce to the 20, and do we get something bigger towards the 10? We'll see what happens. Or does it just fail? But again, I'm just telling you, the signals are bearish. You got the buy the dip crowd trying to come in right now, and they're going to end up disappointed because we're coming down to lower levels. This isn't the bottom. The sell-off isn't over. We'll see. Do these head and shoulder patterns set up? I've marked some levels here of interest on the NASDAQ. And again, with the turning off of the upper boundary of the channel, if we get something like what we had over here, where we dropped about 37.5%, 38%, you're dropping back to the 200-period moving average is a drop close to that. Towards our 200-week moving average. And that's where we dropped down to back over here. That's where we found support over here. You got to take out that 200-week, by the way, to validate the bear market. Lose the 200-week in the weekly, lose the 50-month in the monthly. We bounced off those levels in 2022. That's why all these people telling us we had a bear market back then. That's not a bear market. We dropped more than 20%. So what? We dropped more than 20% during the pandemic, 3.5 weeks. Was that the shortest bear market in history over here? No. Percentage move does not define a bear market. Take out the 200 week, you got to take out the 50 month. That defines the bear market. We get a percentage drop similar to this, though, you could drop back down to the 200 week. We do what we did with the bursting of the tech bubble, and NASDAQ 100 drops 40%, in 10, 11 weeks or so, you could see a move back to the lower boundary of the broadening formation to take out the April low and move beyond the 200 period moving average. And again, the Fed's going to panic when all this happens, and we're going to get a massive rally back up. This is coming, in my opinion, by January. I predicted it. I told you we'd likely see a peak with the Fed. I told you I thought that would be the case. Looks like I'm going to be right about that. A confirmation to the weekly reversal bars last week, this week. If we drop 40%, you're going down to that lower boundary. If we go down to the lower boundary of the channel, that's a 47% plus drop for about 47.5%. Eventually, you're coming down here to take out the 2018 low and the pandemic low, in all likelihood, for about an 80% drop. NASDAQ's going to drop 70 to 80%, and I think more likely 80%. Bursting of the tech bubble, it dropped 83%. Just some levels that I'll be watching, but I think you're going to get a move down, back down, a partial rise with the broadening formation for S&P and Bitcoin to form their right shoulders for the head and shoulder patterns. You see that set up here with NASDAQ too, but NASDAQ and NVIDIA have these broadening formations. We'll be looking for the partial rise back up and then for the bottom to fall out of the NASDAQ. Time frame, again, you've got the divergence on the stochastic, the histograms. When the histogram goes negative, the MACD will roll over, but you're getting your red awesome oscillator bar now. Once we take out the 10-week moving average and drop below the lower boundary of the cloud, dropping below the 20-week moving average here, you're going to get a reversal of conditions in the weekly time frame. This is what happened back over in first half of the year there in February 2025. NASDAQ weekly chart here. I think for the S&P, we get the red awesome oscillator bar. This is showing momentum is starting to wane now. We confirm these reversal candlesticks off major resistance. 10-week moving averages have been holding as support since we got the bullish reversal of conditions in the weekly time frame. If we see the 10-week taken out, you get a reversal of conditions. It's going to open the door to go back and test the low and test our 200-week moving averages. Again, you're going to see the MACD roll over here. In the next week or two here, you're going to see the stochastic drop below the 80 level, and you're going to start seeing a drop below the 10-week moving average. And we'll be watching, do we set up those head and shoulder patterns in the daily time frame and on the 60-minute charts, or do we just seeing a bigger sell-off?